This is why you keep losing trading meme coins. Once you understand this, you will never trade the same way again. What's up, fellas? Today I'm breaking down the exact blueprint I used to avoid most scam coins and trade meme coins profitably. I paid for these mistakes the hard way, so you don't have to. Let's get into it. First thing you need to understand, the meme coin market is driven entirely by hype and narrative. That's it. It's all about attention and market volume. Trading fresh launches without it is pure gambling. And around 99% of new pairs are straight up scams. Unless there is a major news, big tweets from influential people or real utility projects, there is no reason to blindly ape. And yeah, I personally know people who drain liquidity from new pairs full time. That's their entire business model, but we will leave it for the next video. Some people say, but if I buy early, I own a big percentage of the supply. That doesn't mean it's a bad strategy. Most of the time you're just positioning yourself as a perfect exit liquidity. Let's open a random coin. You will often see the same pattern. The coin launches, then developer instantly sells. A KOL buys, then instantly sells. The coin fails to attract attention. Without hype, there is no volume, or the narrative is wrong. At that point, traders are just burning money, hoping momentum randomly appears, so they can double or triple their position. That's not trading, that's nonchalant gambling. This is where tools like Axiom become powerful. Let's open the trade section. Here we can see every single transaction in real time. We can track when the developer sold, who bought after launch, all buys and sells, and analyze why and how fast everything is happening. Very often, developers bundle supply across multiple wallets to extract as much money as possible. Now, here's something important, and this part gets misunderstood a lot. If the developer doesn't sell his position in first 30 seconds, that's usually a bad sign, waiting to build liquidity and hype so they can dump later at higher prices. The only time this is actually positive is when you're dealing with strong, legitimate projects, where the supply is clearly locked or transparently allocated. But in meme coins, 9 times out of 10, no early sales means delayed extraction, unless you see the clear proof of locked supply, with clear wallet distribution. You can ape into a coin. Now let's go deeper. Open SoScan, go to transactions, zoom out and scroll all the way back to the beginning. What you will usually see at the end, developer wallet that created a coin. Then instantly multiple wallets buy in within the same second, bundling at the same block. That's not organic. That's a developer bundling or insiders with snipe bots getting in. These wallets usually hold most of the supply, giving the dev total control even if he sells his part of supply. If you see this, don't touch the coin, you will get farmed at the end. Now let's open another coin and go to the holders tab. This is one of the most important sections. Here Axiom shows how much percentage each wallet holds. For example, this wallet invested $500 at 9.7k market cap. Now it's sitting at 1.5x profit. It already looks suspicious because he isn't taking any initials, even if the coin has or does not have any volume. Now look at this. He holds 5% of total supply. Anything above 3% is dangerous, especially at low market caps. That usually means an insider or dev bundle. Spotting these signs at the beginning, you can avoid rugs. Now let's click bubble maps. This is one of the fastest ways to detect wallet bundling in a limited time. In legit coins, most bubbles are separate. In scam coins, you will see clusters of wallets linked together, one group controlling the supply. So if you see large clusters, just leave. Another very important sign is newly created wallets, marked as a green leaf. If you see many fresh wallets, or wallets that were funded around the same time, from the same exchanges, and buying at the same time or holding without selling, that's a classic rug and chart manipulation behavior. Especially if they hold tiny or similar amounts of balances, but never sell. And one more thing, if a coin can't break key market cap levels within first 10 minutes, volume is gone. We track this deeper inside our Discord. Good coins move fast, but have you heard about slow cooks? That's where the most money is made, but I will leave it for the part 2. Inside our Discord, we analyze market together, share setups, track wallets, and call out good narrative coins. More eyes means fewer mistakes. If you want better entries and cleaner exits with fewer bad trades, the Discord is in the description. If you found this video valuable, you know what to do. I will see you in the next one.